Good day, all. Ira Epstein with your financial market wrap-up for this Thursday evening, March 12th, 2020, just after 5:20 p.m., Daylight Savings Time, DST. Okay, you're in a market meltdown. I don't know what else to say. It's not a melt-up, it's a meltdown. This is how we've reopened tonight. So not only were you down, as you know, the 10% in some of the stock indices today, you're just adding to it. As that goes, you're creating pressure on other markets, like in the metal market. You're putting pressure on other markets such as the bonds, not the bonds, the energies. And the bonds and notes, well, they're trying to be saved by a mixture of the Fed adding $1.5 trillion between today, Thursday, and tomorrow in the repo market. I've never heard of numbers like this, so I didn't say it wrong. $1.5 trillion overall, and they're not through. We're going to see more things coming out. Remember, over the weekend, I can't stress this enough, you're going to hear about more of the COVID-19. We have more test kits out there. You're going to hear more news. I'm sure you're aware everything is closing down. And I was on today, Fox, and I said, you got to think of that movie called The Professional that had, I think, a Jean Reno and a Gary Oldman. And it was about a killer. And Gary Oldman says at one point in the movie, he's cornering Jean Reno, and he goes, I need the police. And the guy said, how many? He said, all of them. Well, my point in saying it, if it's lost on that, is what are they going to close down? All of them. I don't know what more to say. Everything. The CME floor closes tomorrow at the close of the day, 4 o'clock. Guess what? We don't know when it's reopening. It's closed. They've sent out the memo. That means that electronics will take over all the trading. My clientele trades electronically, so we don't see it as an impact. And we've made all of our provisions to work from home, to work remotely as best as we possibly can. But we're ready for it. Amazon today told people, what? Work from home if you can. You're going to see store after store. This is going to get worse before it gets better. The S&P's recognizing it. Take a look at what's going on in the week. You're down, what, 18% for the week as of this exact moment. Take a look at how much you're down tonight. You're just in a state of collapse. If you try to make sense out of this, you can't. So don't waste your time. These kind of markets are not for the average local, well, the average trader. They're for the pro. They're not for you. Now, if you want to trade them, nobody's going to stop you. It's America. But the volatility is going to be insane. And the moves, if you go to the bathroom and come back to your screen, get ready for shocks, up and down. You've got lower highs, lower lows in a state of a free fall. You've had your bearish crossovers. I was telling you that was happening coming into last night. Watch out, this could happen. It happened, and look at what happened with it. Algorithms have multiple programs they watch, but I think moving averages, I've watched them so many years, I think they build in things like that, and you can see you're extending to it. Can we get a bounce out of left field of 10%? You heard what I said, 10%? No problem. It could happen for no reason at all. Resistance is still back up into all these moving averages. If you take a look at the Bollinger Band, even with panic, you don't throw this out. You get under them. I think the pros are coming out the first challenge. Get on the right-hand side. They might be selling the market again if you get the embedded reading. And that's what we're going to wait and see. If you look at the NASDAQ, oversold, under the Bollinger Band, trend down, bearish crossover today. 18 under the 100, next target the 200 if the market keeps going like this. Dow, under everything. Here's your crossovers. And if you don't pay attention to these, then I don't know what you're listening to me on. This was Tuesday, had your crossover follow through. Watch out. Market is under the Bollinger Band, and then yesterday it gets to the right-hand side. Your collapse happens today. Trend down, bias down, oversold, so what? You're in a panic mode in the market. In the Russell, this market only had a 1/3 retracement, and then it collapsed, and it's still coming down. You're down tonight another 2% or so, but you're down monstrous numbers in a short period of time. And the VIX is up to what, the 75 level? Is it headed to 100? Don't know. but there's nothing bearish here. This market's still in an uptrend, stayed with its upside bias. It is overbought, and when you get over a Bollinger Band at any point, I'm looking for it to pull to the right-hand side of it. In the T-bond market, I was fascinated today that the Fed threw all this money at the market, and the market closed lower with an outside day down. I kept looking at my chart going, am I seeing the right thing? You lost the embedded reading. That often leads to price and the 18-day average coming together. So you finished down. I just want to give you the idea. 1 in 17 seconds. You've made that up. But I have the market with what? Lower highs, lower lows. To negate this, you've got to take out the highs of today. Those highs were, as you can see, at 184.7. Then I'd look for the upper Bollinger Band. I know it sounds like it's right around the corner from it, but it isn't. That's 186.1. That's quite a move. It could happen. Same thing in the 10-year. While the momentum is turned down, you're getting the opposite in price action. Often when you lose this, it means price and the 18-day average are going to make a run at each other. I certainly think you're getting a lot of divergence and a warning sign out of that momentum. When I come over to the dollar index, just take a look at coming in. This is what you looked like, and here was my warning. So even if it doesn't work, do you think if it didn't work in the bonds or notes, I'm not going to pay attention to it all the time? You'd be wrong. I'm going to look at that. You lost it. That could mean price in the 100-day average want to make a run. It's the closest of the moving averages. This was yesterday. I've got confirmation that I'm still looking for the zone, but ideally the 100-day. Boom. What did it tell me? Short side of the market's over. What else this saying? You're in vertical moves. Too difficult. Just swinging back and forth. Eurocurrency. We had a big warning sign. This was a bullish embedded reading. You lost it here. And I know in my newsletter I said, give these markets no quarter. You lose that, be careful. Now I'm targeting the 100-day average. Bingo, you went to it in the 18, and you're trying tonight to hold those. You see what's going on? These are such big swings. You've just got to know how to keep your hands in your pocket sometime. In the end, you've lost your embedded reading, and while people are buying it, I don't know. I'm going to stick with what that told me. Long side of the market, it can go higher, but I'm still looking to see if that momentum means it's going to break back. Bitcoin dropping like a rock here. This is not a wrong quote. Take a look at how much down today, $1,800. When people need money, they sell everything. And people are scared. They're scared that stores are closing. They're looking at Italy as the model. What does it mean? And they're right to be nervous. So everything's coming down. Look at the energy difference. It's not a misquote. You're under $2. Brent and WTI are almost at the same price. I don't remember the last time it was like that. And you can see what's going on. If you're in a bear trend, embedded reading, it's still looking bearish. WTI, trying to develop that embedded reading, still bearish, riding the lower Bollinger Band. If you close down American factories, where's the demand for these oil products? Gasoline, running the lower Bollinger Band. And you know what I'm going to tell you? Embedded reading, until that red line turns up, I'm looking for the pros on rallies to sell. Do I, over the weekend, want you to have any positions? I'll let you do your own thing. How do you handle a Sunday night is the problem. Now take a look at this crazy market. You hit the lower band. If you go up, maybe the upper band's the resistance. You hit it, and now you're pulling back to the 18-day average. It's everywhere. So what I'm saying in plain English, as plain as I know how to be, I've been around this a long time, have the experience, been through the 87 crashes, the 90s and all that. I've seen volatility. I've never seen volatility this big. And I don't think any pro that's my age has. There's a point when you, the public that watch this, don't be a hero. Let the market settle down and then you take your shots. If you'd like our information on different markets, by the way, how you get it, go to our website. Under free offers in the bottom right, take it from there. We're still here. We're waiting to see, like other offices. I don't expect there's a problem. Nobody in our compound here, as I like to call it, has had the virus, but we're all being very careful in Chicago, like other cities. Wow, it's a big city. got to be careful. I'm Ira. You have a good day. I'll see you tomorrow.